Welcome back, everyone. This is our Gold Weekly Review. Gold moved higher in the latest daily sessions as the economic and political circumstances around the world continue to support bullion purchases. It could be noted that circumstances in the US, in Europe, and the UK may be pointing to further economic risk due to the fact that a mixture of happenings are currently in the market's focus. Our report for this week aims to identify and briefly overview some of the most important matters that are currently in the gold market's focus. In the US, a rather gloomy picture over various matters continue to weigh in on the general market sentiment, starting with the stimulus package, of which the talks are still ongoing and have not been able to produce a solid agreement. Even though it is widely accepted that the US economy continues to require further economic support to fully recover from the damage suffered in the previous months, at the moment we do not have evidence that talks are leaning towards a package deal. The indecisive approach to a new fiscal stimulus package has sent the USD lower in the previous days, which tends to support bullion generally. Further to gold's price advantage, most of the market's focus is currently placed on the US elections. In our view, having in mind the plans that each president candidate has if elected, according to what they have said so far, the US economy will take a very different route. The results will most definitely be reflected in gold's price action, thus any headlines related to the US elections should not be taken lightly. Yet for the current week, a much anticipated event will be the US presidential debate that will take place on Friday the 23rd of October at 1 a.m. GMT. Even though the last debate was seemingly a disaster as the two candidates resorted to argue on a personal level, the event could produce significant market-moving effects for gold's price. Furthermore, global COVID-19 cases have apparently gotten out of proportion as there are now 40 million cases worldwide, with the 8 million being in the US. Even though governments around the world have imposed new and tighter measures, the outbreak persists. The negative effect on the economy is expected to be prolonged and could make its presence felt in the next months moving into the next year. Gold's ability to reflect uncertain financial circumstances has come into play during the past year, and the bullish tendencies shown so far could persist until something changes the general global sentiment. From the UK, the Brexit matter tends to be in focus at the moment, but nothing substantive has been announced yet. The importance for Europe and the UK to land a deal is crucial. Any significant development on the matter could move gold's price accordingly. Please note that the matter is subject to unexpected headline releases, and caution is advised when trading gold under these circumstances. As a closure, some of the US financial releases in the next days could be of particular interest to gold traders. On the 22nd of October, we get the initial jobless claims weekly figure and the existing home sales for September. On Friday, the 23rd of September, we get the preliminary US market manufacturing and services PMI for October, which in our opinion are very important indicators for the US economy. Furthermore, on Monday, the 26th of October, we get the US new home sales units for September, and on the 27th, the US consumer confidence for October. Moving now to our technical analysis. This is gold's 4-hour chart. In our view, a minor upward movement has formed from the 14th of October and is currently a continuation of the prolonged upward movement that has commenced since the 28th of September, as noted in our chart with the ascending line. The latest upward movement of gold has sent it toward the R1 1925 resistance level, but was unable to clearly test it, as was the case between the 9th of October. However, other levels we have noted higher for gold include the R2 1940 line and the R3 1955 barrier. In the opposite direction, and if a bearish sentiment is enacted, the S1 1910 could come into play initially. However, even lower we have noted the S2 1890 hurdle, which in our view could require great persistence from the bears to be conquered. Yet even lower, the S3 1875 is in our opinion the lowest level to be reached before turning the sideways view with bullish tendencies into a bearish one. The RSI indicator below our chart is currently running across the 60 level, implying some buying momentum is taking place. That's the end of this report. We hope you enjoyed it as well as found it useful. Thank you very much for your time. Enjoy solid trading.